Ladies and gentlemen, welcome back to the channel. This video is dedicated to Tesla earnings. If you don't care about Tesla earnings, you don't want to know my thoughts on Tesla earnings or what's important for Tesla or where Tesla stock is probably going after earnings, higher or lower, well, this is not the video for you. And considering time is the most valuable commodity or currency or thing in the world, to put it simply, don't waste your time. But for those of you guys that are interested in this, I'm optimistic. I'll tell you why. I'll tell you what to watch out for, what's at stake. Let's go ahead and get started. Okay, so first and foremost, Tesla is going to be reporting earnings Tuesday in after hours. Analyst consensus EPS forecast for the quarter is 45 cents per share, and revenue is expected to be 21.85 billion. And these are pretty comparable to the numbers you had a year ago. On a year-over-year basis, you're expecting no change in EPS and a 2.6% increase in revenue. Keep in mind, in the prior quarter, Tesla missed earnings per share estimates in Q4 with an adjusted EPS of 73 cents and revenue of 25.7 billion. So versus even last quarter, okay, bottom line EPS is like 40% lower. That's the expectation. That's a low bar, okay? Very low bar for earnings, for EPS. Now, over the trailing 4 quarters, Tesla missed estimates 3 times and beat once with an average earnings surprise of 0.8%. So Tesla is it doesn't beat on earnings. Tesla usually misses on earnings, okay? Historically speaking, in recent memory. But it doesn't matter. Now, yes, you will say Tesla has had a history over the last 5-6 quarters of falling a lot on earnings, and that is true. But it depends on where expectations are. See, right now, expectations are at the lowest levels I've seen in a long time. On a quarter-over-quarter basis, to expect EPS to fall over 40% is incredible, okay? That's wild. Now, it doesn't even matter if Tesla, misses the numbers or not. Last quarter, Tesla missed across the board. It was bad if you look at the headlines. But the stock still went higher because of what Elon and Tesla said on the conference call. When you invest in a company, it's not about the last 3 months. It's about the next 3 months. In the next 3 months, and what's the next 12 or 24 months going to look like? Okay, that is what investors actually care about. And that's where I think we could be pleasantly surprised. Now, keep in mind, over this weekend, there was news that Tesla is delaying the cheaper variant of the Model Y. We don't know exactly if that's the Model 2 or not. Tesla likes to I kind of let news circulate for a while and then shut it down. The headlines are coming from Reuters. You got to take Reuters with a grain of salt in anything they say, literally ever. So, is it true? Is it not true? We just really don't know. Assuming here, big assumption, that it is actually true, I think you've priced that in. The stock's down over 50%. We will see what the reaction looks like tomorrow morning. It wouldn't be super shocking, regardless, to see Tesla sell off before earnings. That happens a lot. People are like, hey, Tesla has a history of selling off after earnings. Let's get ahead of that selling up front. I think it was 4 quarters in a row that Tesla fell 10% on earnings. Maybe that was 2024, 2023. There's a history of this. So I wouldn't be surprised if that headline mixed with historical patterns around Tesla earnings caused the stock to sell off on Monday, tomorrow. But I'm optimistic. The expectations are so low that, sure, even if Tesla is delaying the quote-unquote Model 2 for the next 3 months, you've already kind of priced that in, and especially after tomorrow morning, you're going to have already priced that in, okay, with any downside that we get. And I would argue, basically assume that if that's the case, if we are getting bad news there, we're probably going to get really good news on another side of the Tesla story. That is robotaxi. Now, I think Elon probably wants to impress investors. He probably wants to, get Tesla back on the map or the radar of investors, if you will, after the stock has fallen so much. There's probably going to be really good news for robotaxi. Not just the same old. You're probably going to get, I wouldn't call it definitive like guidance, because Tesla really doesn't do that. But I think Elon's going to, give us larger numbers to look at for robotaxi. Like, instead of Texas and California launching in 2 cities perhaps this year, maybe it's 5. Maybe next year there's a dramatic scale up in robotaxi where we're going to be looking at 30 or 40 cities. Tesla's going to eat all of the competition before the competition even arrives. Like, this is a Tesla takes all market. Okay. I would not be shocked there. And if delaying the Model 2 gives us some news like that, oh boy, it's going to be a bad day in hell for the shorts coming Tuesday and after hours heading into Wednesday. Now, obviously, I don't know if that's going to happen, but I do think we are going to get very positive news on the robotaxi. Now, I think there's a lot of other catalysts that people have long forgotten about. FSD entered the Mexican market in this last quarter. It entered China in this last quarter. Trump bought a Tesla this last quarter. What is that doing for sales and demand? Is demand actually picking up because Elon has tapped into 50% of the country in terms of Republicans that would have never bought an EV to begin with? Maybe. I don't think the demand issues or brand damage is nearly, not even close, to the extent of what has been portrayed out there. I think that's also another positive catalyst area if Elon and Tesla hold their full year guidance. Keep in mind, as the stock has fallen 50%, most analysts have lowered their estimates. Like for deliveries this year, check this out. Tesla delivered about 1.8 million vehicles last year. Do you know where a lot of these new estimates are coming down to? 1.7, 1.6 million deliveries this year. What if Tesla reaffirms 2 million deliveries this year? Somewhere around that area. I think that would catch a lot of people by surprise as well. That, oh wow, there's not this brand damage. Okay, now what is FSD launching in China, to a lesser extent in Mexico, due to profitability? FSD is 90% margins. Like, that's where Tesla makes their money. If people buy a Tesla, sure, they're gonna make 9% net margin, something like that. Just throwing numbers out here. FSD, 90% net margins, roughly. Maybe 100%. Who knows? Tesla doesn't break that down and specifically clarify that. But what does that do for profitability? I think that would be good. And also with the new Model Y, how is that selling? Okay, that's another question that I think people have on a kind of global basis. Okay, especially Europe. Europe, you've seen some weakness. They tend to be very political. Is there a weakness in Europe? It's really, hard to tell. We'll see. Maybe Elon and Tesla clarify that. What does Tesla say about Optimus? After all, if we're going to onshore all of these tedious, disgusting jobs, we're going to need humanoid robots for them. Because I'll bet your ass Americans are not going to go sit in sweatshops and sew clothes all day, or go stamp metal in large numbers. They're just not going to do that. As Elon said on prior earnings calls, like, it's hard to get people to do jobs they don't want to do. Like, the number one, thing that people look for in a job is not the amount of money you make. Like, that is like third on the list. It's actually like, do they like the job? Do they hate the job? If you absolutely hate a job, but the money's really good, you're not going to do it for that long. you're going to quit. At least like 90% of people. Next up, you have like work environment and like management. Most people leave their jobs because they don't like the management. And then number 3 is like how much money it makes. Okay. So that's way down on the list. Americans don't want to do these jobs that are trying to be onshored, right? Be, brought back to America. That builds a very strong case for optimists. And the faster we can develop that and deploy that, the better off. We got guidance last quarter that Tesla was looking to build about 5,000 Optimus robots this year, which is probably still accurate. What about next year, though? What do we have to look forward to with Optimus next year? What kind of deals could be done? That is a sleeping giant of Tesla that nobody is paying attention to. Okay, what about India? I mean, that's a massive market that's starting to open up, or will be a massive market one day. What does Tesla have to say about that? There's so many things that I think are actually going right at Tesla that most people are not paying attention to. That's why I'm bullish on Tesla after the 50% drop. If Tesla was a $500 stock right now, this would be a little bit different of an equation or a different video here. But the stock's down 50%. I think you've achieved peak fear in Tesla specifically, unless, I don't know, there's some kind of crazy news that like we're completely missing out there, which I deem as unlikely at this point, or unless there is just really bad news on trade, the economy deteriorates. That's not what we're expecting this week. Durable goods orders are expected to be really good. People have jobs. Initial jobless claims have come in low. And I don't think with 7 million job openings still out there, which is historically really high, you're going to see companies in a huge rush to fire people unless these tariffs stick around, and companies have to try to raise margins internally, right? Unless there's no deals done, the employment market should hold up. That's, kind of my thought. And in that environment, people are going to continue to spend. It's going to be difficult to go into a recession because people spend all the money they make. Okay. We've talked about this in videos prior. So unless there's some kind of crazy recession, data or something that happens, right? Bad trade headlines. I think it's going to be really hard to get back to peak fear. Again, I used this example in the last video, but I think it's the greatest example of all. It's like skydiving. Some of you may have went before. Let me know down below in the comment section if you've done this multiple times. But the first time you go skydiving, you are going to be the most scared you're going to be, okay? Unless your parachute fails, which, knock on wood, that never happens to anyone. I don't know if I plan to skydive in my life. We'll see, actually. Maybe. But the first time you go skydiving, nonetheless, you're going to be terrified, okay? Unless you're psycho. I think that'd be a big red flag, okay? If you take a girl, or if you're a girl, you take a guy skydiving and they're not terrified, big red flag. Nonetheless, you're going to be terrified, okay? 99.9% of you. But after you're done, and maybe you want to go again, it's not going to be nearly as bad, okay? You might still be scared. It's not going to be nearly as bad. That's kind of where we are in markets. You've already skydived once. You've already experienced that, if you will, peak fear. I mean, you'd have to see something fail, like the parachute not open, to get even more scared than the first time. Okay? Which, of course, at this point, the parachute may not open. You might have to resort to the backup if, in terms of the markets. That would obviously be an issue. That's where you get more dramatic selling. That's where you get, larger downside in markets. And at this point, it's really about, is the damage already done in the economy? And from my perspective, I think the damage has been done in the economy for the better part of 2 years, right? 2.5 years. Look at earnings. Look at Elf or Estee Lauder, or look at Nike, look at Starbucks. I mean, these like discretionary companies have been in the shitter for a long time. Like, could it get worse? Of course, anything can get worse, but it's already bad. Okay. And, We'll see what happens. But for those reasons, I'm optimistic. Now look at this. This could get interesting. Trump's approval rating on the economy drops to the lowest of his presidential career. Wow. Donald Trump is registering the worst economic approval numbers of his presidential career amid broad discontent over his handling of tariffs, inflation, and government spending, according to the latest CNBC All-America Economic Survey. Okay, the survey of 1,000 Americans across the country showed 44% approving of Trump's handling of the presidency and 51% disapproving. That's pretty good, okay, for like a president survey. I will give him that. Slightly better than CNBC's final reading when the president left office in 2020. On the economy, however, the survey showed Trump with 43% approval and 55% disapproval. The first time in any CNBC poll that has been net negative on the economy, while president. Now, you can see Trump's Republican base remains solidly behind him, but Democrats at negative 90% net economic approval are 30 points more negative than their average during his first term. And independents are 23 points more negative. Blue-collar workers, who were key to president's election victory, remain positive on the Trump's handling of the economy, but their disapproval numbers have shot up by 14 points compared to their average for his first term. Trump tends to take these polls seriously, these approval polls, and they are delayed. This one was from April 9th through the 13th. So what Hassett said over this weekend is this week, starting Monday, you're going to get a flurry of trade activity, trade deals, essentially. I think Trump wants to end this. I think Trump wants to end this trade war with the best deals possible as fast as possible. Because your approval rating's tanking, interest rates are skyrocketing, the Fed's not going to cut, you can't fire Powell or bully Powell into cutting. Countries maybe starting to weaponize the Treasury market. This has turned into a disaster for Trump. Okay, quickly getting there. Without these tariffs, the Fed would be cutting rates right now. Okay, with CPI, core came in at 0.05. Okay, on a 12-month annualized basis. Okay, the number's laughable. That's 0.6% CPI for a full 12 months on core. The Fed would be cutting rates right now. Okay. And I think hopefully advisors around Trump are telling him hey, we don't have an inflation problem. We have, a tariff problem that could cause inflation that's going to hike interest rates and cause countries to weaponize the Treasury market. So long story short, I could honestly go on here for the next 30 minutes or so. I think things are probably going to get better versus worse than here for the markets. And I think Tesla is that company that at least I want to buy right now, okay? That I want to be exposed to, that I think is going to do very well as the markets recover. And I think, again, you're already priced for bad. Now, there's a lot of bears out there. There's a lot of people that are going to be in this comment section that are, talking negative, and that's fine. Remember, they probably have puts. Okay, they probably sold out a long time ago. I do think the risk reward is skewed positively, given what is really going to surprise us coming on Tuesday in a negative way. Tesla would have to cut guidance themselves for deliveries this year, which is possible, but I honestly would be surprised if that happened. Tesla would have to delay the robotaxi event. I mean, it looks like they already delayed the Model 2. What's going to surprise us at this point? Now, Tesla could be down quite a bit tomorrow, but after that, I don't really see there as a negative shock coming. Could be wrong, obviously, but I think we are going to get positive news. Now, with that said, I think if things go right, if we start to get some trade deals, if we get some good news on Tesla's earnings and it's not as bad as people fear, Tesla could be a $300+ stock, maybe this week. You could see a 20% rally on Tesla earnings. Now, I don't know where the stock's exactly going to open for trading tomorrow, but a 20% rally would be up to about $290 or so. It could get a lot more aggressive than that. You could be a $340 stock by Friday or by the following week. That's some pretty aggressive upside. That's not out the cards here. Now, if things go bad, Tesla's going to be a $200 stock. So I kind of see it as like you have $40 of downside because you've already priced in so much bad, or you have, $100 of upside. I see the risk reward 2.5x better to the upside. Again, if Tesla could fall 10%, Tesla could go up 25%, right? That's kind of what I'm saying here. There's a lot greater of a chance we get an upside move versus downside move. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day. Let me know your thoughts. Seriously, where do you think Tesla's going? What do you think they're going to say? What's going to be announced? Does it make sense what I'm saying? That we priced in a lot of bad news? Love your thoughts on that. Have a great rest of your day. Happy Easter, and I will see you in the next one.